A very good afternoon to all friends. I welcome you all to the 125th program of AASB today. Today's topic is key consideration in audit of hospitality sector. I'm Sanjeev Singhal, Central Council member and chairman of the Auditing and Assurance Standard Board. Friends, it's been the constant endeavor of the Auditing and Assurance Standard Board to keep these specialized topics now, because we have already completed the discussion on the specific auditing standard, and now we are taking sector specific areas for consideration. So today the topic is audit of hospitality sector, and we have two very esteemed speakers on the topic, CA Gaurav Bhatia and CA Paras Chadda. Both are very renowned faculty with AASB and with the Institute of Chartered Accountant of India. And to moderate this session, again, we have two very eminent people, Ashok Jigyasi ji, who is from Renew, and CA Kulbhushan Sharma ji, who is a practicing Chartered Accountant. I'm extremely thankful to my Vice Chairman also, Vishal Bhai Doshi, for taking these initiatives along with me, and Anil Lalji, who is single-handedly managing all these programs. And friends, your participation has always encouraged us to take up more and more of these initiatives. We have also come out with an audit tool now, and for which the trial is also available on a registration basis, and Institute has negotiated a good discount on these products. There is practice management software also, which is being given to the members in practice free of cost. We have also issued a working paper template and auditing standard checklist, which is available to download. And we are also running our audit expert helpline from 16th April to 30th September. So you can ask your audit related queries from our experts, and there are no charges for it. So the number of initiatives that we are taking, and the knowledge initiative is one of those very, very important initiatives. So today we'll be dealing with the key consideration in audit of hospitality sector. I thank both the speakers and the moderators for their valuable time. And now I invite our moderators to take it forward. Thank you.
Thank you, Sanjeev ji. Good afternoon, ladies and gentlemen. We welcome you all on webinar number 125, organized by ASB, and on key consideration of audit of hospitality sector. I really thank Sanjeev ji and Vishal ji for giving me this opportunity today. Now I want to introduce Paras, who will be taking this session. Paras Kumar Chadda is a qualified chartered accountant having 12 years of experience and has been working as senior manager in FAAS division of EY. He has also completed India certification course and BRSR certification courses from ICAI. His primary area of expertise includes gap conversion from IGAP to IND-AS or IFRS, a review of AS and IND-AS standalone consolidated financial statements, a review of financial statements prepared under hyperinflationary economy, review of business combination accounting, and providing opinion on complex transactions like business combination, financial instruments, share-based payments, revenue recognition, lease, etc. Before joining EY, he had been working in audit division of SR Dinodi and company. Apart from his routine job, he is involved in a lot of other activities, like his name is registered as a technical reviewer on the panel of FRRB and research committee of ICAI. He is regular faculty member of India's certification course, which is conducted by Accounting Standard Board on behalf of ICAI. He has been regularly rendering trainings on various accounting and auditing topics such as business combination, consolidation, revenue recognition, lease, PP, observation identified by FRRB, going concern, and other standard of auditing. Now I request our my co-moderator, Mr. Kulbhushan Sharma, to briefly introduce our another guest speaker, Mr. Gaurav Bhatia.
Hello. Hello.
Yeah, Kulbhushan.
Hi everybody, and thank you, Ashok Jigyasi ji. And first of all, I would like to thank Sanjeev Singhal Chairman of our AASP, uh, Vishal Doshi and I would like to appreciate a part of Anil Lalji. Uh, they are doing a very appreciable work for all the CA fraternity. They are bringing more issues. They are discussing a lot of issues which are coming in audit, and we mediocre firms, chartered accountants are facing day by day. Secondly, I would like to congratulate Sanjeev Vishal Anil for doing successful program. And I think this is 125th program of this council year. And this is also very great to know that they are spreading so much education among our member and they are enlightening us by this much of education. Even to become a chartered accountant is also difficult. We read a lot of things, we studied a lot, but after that we are also learning day by day. Uh, uh, to cut it short between you and our speaker, I would like to introduce our first speaker of today. That is Mr. Gaurav Bhatia, who's a very brilliant chartered accountant with over 20, 17 years of experience in auditing and advising companies in the area of corporate governance, enterprises risk management, and internal control reviews. He is the executive partner and leads the risk advisory function of ASA and Associate LLP in the Delhi NCR region. Gaurav holds certification in forensic accounting and fraud detection and business responsibility and sustainability reporting. That is BRSR from ICI, and that is very much in discussion nowadays after Sanjeev ji is heading chair in UN for India. That is very, very, very famous course nowadays. He has been a special invitee to the board of governance of IIA of Delhi. Beside this, Gaurav is a member of various trade chambers and an active speaker at various forums on the topic of risk and internal controls. An avid traveler, he is also a fitness enthusiast and a motivational speaker too. So I think I have made it cut short because the introduction of Gaurav Bhatia is too long. I am sorry for that. For these words, I would like to invite Mr. Gaurav Bhatia to please enlighten us on the issues and please take the session. Please, Gaurav Bhatia ji, please.
Thank you so much, Kulbhushan ji, for your kind introduction and for those encouraging words. Thanks a lot. And thank you, AASB. Thanks to Sanjeev ji for this opportunity once again. I mean, I think it's a brilliant idea, and Sanjeev ji's vision only because of which a lot of young chartered accountants are taking the stage, like me, and it's a pleasure actually to share the knowledge with the fraternity, right? Based on our experience. Thank you, Sanjeev ji, for that. Thank you, Vishal ji, as the vice chairman. Thanks to Anil ji. I never forget to thank him enough for organizing this. I know how much pain it goes in organizing these webinars, but it's a brilliant thing, Anil ji, and it's very precisely executed. Thank you so much. And also thanks to Ashok ji and Paras as my fellow speaker today. And on that note, I would like to begin the session. And I would just like to share my screen so that you all can see the presentation. Let me know. Anil, please let me know if you can confirm if the presentation is visible.
Make it full screen, please.
Yeah, I'm just putting it on that.
Perfect.
All right. So on that note, we will begin today. So we will have this session in two parts. So the first part, the topic is common, that is key considerations in audit of hospitality sector. And as you would know, earlier, I think the last series which was going on was on the auditing standards. Now AASB has come out with the sector specific or sector agnostic sessions, I think, which is a very wise thing to do, because a lot of problems and a lot of accounting issues and the auditing procedures are dependent upon the sector, in fact. So there have been manufacturing, automotive, and a lot of others have been planned. So this is today about the hospitality sector. So let me give you a quick disclaimer that a hospitality sector is very wide. Right? It encompasses not only the hotels, but it also has restaurants. It has the airlines, right? Airline business. It also has cinema halls, entertainment hubs. All this comes under the hospitality sector, right? But today we are primarily, me and my fellow speaker Paras, we will be talking more about the considerations for a hotel industry. So I think that's what is going to be the theme for today, and how we have planned it. That I will be primarily taking you through in the first half of the session regarding the overall understanding of the hotel business, that how it functions, because it is very important before we put our hands on or plan anything on the auditing side. We should have a proper understanding about the environment, about the business, right? So I'll just take you through. Then I will discuss about some risk assessments and internal control matters, and primarily focus on the cost or the expense part in the hotel sector while you're doing the audit of the hotels. So how to audit the cost part and what are the key considerations, right? What kind of challenges can you face as an auditor? That we will talk about in the first half. And then my fellow speaker, Paras, will take you through the second half of the session that is primarily related to the revenue aspect, which is again a very interesting and a very important area, because it's a very high risk area, definitely, and from the fraud risk perspective also. So Paras will share his insights from the revenue perspective. So let me begin with that. So first, about understanding the hotel industry. I think this is one of a very peculiar industries. If I compare it with a normal setup wherein there is a normal trading happening or there is a manufacturing setup, right? There is a plant setup. So hotel doesn't work that way, as we know. It's a very different industry, and the terms which are used are also very different with respect to the accounting, with respect to the operations, right? Even from the control standpoint, right? The way the documentation is prepared. So I think people who are primarily already working in the hotel industry, they would probably be able to relate to us today. And those who have probably just started working in the auditing side and have some clients in this particular sector, very important to pay attention to the minute details or the terms which we are going to take today, right? Because I think it's very important that, especially for the young chartered accountants or the people who are uh, doing their internships and all, while they are going to the any kind of a client, they should have a basic understanding about the nomenclature or how you should actually talk to a person of that particular background. You can't go to a hotel industry and tell them that how's your work in progress going, WIP inventory. So right, there is nothing like that there. So there are different aspects related to it which we are going to discuss today. So the first thing which I probably like to highlight is the economic landscape. And if you are talking about the particular sector, the economic landscape, especially with respect to the country like India, right? Because that's what I'm going to talk about. So in the hotel sector, I think there is a lot of domestic dominance in India, right? India as a country is very different in comparison to the global hotel industry. Why? Because globally, you will see the hotel industry is channelized into two different categories, right? One is the business travel, and another is for leisure. And within that also, there is a domestic traveling and there is a foreign travel. But in India, there is a third category also, which is a very interesting one. That is the spiritual hospitality, right? A lot of people in the country, in India, visit to various locations. The reason being Ayodhya, as you would know, and you would see that how the hospitality or the hotel sector has gone right over the roof, right? Be it as per the market is concerned for the likes of the five-star hotels or the other hotel brands, mid segment hotels, that a lot of travel happens because of the spiritual reasons. So from that perspective, Indian travel industry is primarily driven by the domestic travelers, right? So that is very important for us when we are looking at that who's the customer base for a hotel, or who are generally the people who are going there. So that is one. Second, about the foreign tourists. Now, see, pre-COVID era, a lot of foreign tourism started happening in India, right? Because of government's great initiatives of Incredible India or Atithi Devo Bhava, and a lot of slogans which were actually used by the Department of Tourism also. But I think during the COVID, like all the other countries, India also got their due share of the hit. And the hospitality sector in 2020-21, it went, it went as a nosedive. It just went down badly. But now again, it has started picking up. So foreign travel is still going up, but not currently up in a way that it should be pre-COVID. Then aggressive marketing campaigns, that's a very interesting aspect of this particular industry, that you would see a lot of hotels publicizing. In fact, I don't know how many of you have seen the Google AdWords, right? Telling you that if you've ever thought of going to maybe any spiritual place or a Tirath Yatra or somewhere, and you would just mention the name of the place and you would start seeing on the left or the right side window that a lot of hotel names starts coming up, right? So because of that, you'll see a lot of marketing has started happening. And I think hotel industry is one which is using technology at its best. If you'd ask me, I think the way it is happening right now, the prices are monitored. So that is really good and very competitive. So just a small number for all of you. Why I'm sharing this is primarily for you to know when you are doing any audit that what is the industry trend. As one of the auditing procedure, right, is that you should have an understanding of the industry. And while you have an understanding of the industry, you should also know about the key terms as well as the key numbers, that how the industry averages are moving. So ICRA, or a credit rating agency, has estimated that the pan-India hotel uh, occupancy, right? So that is again some of the terms which I will use in today's session. I'll tell you more about it in the subsequent slides. So overall occupancy, that how many rooms are occupied, right? It is going to 72% in the coming 1 year. So that's a fairly, on an average basis, it's a very high number. If you see, there was a time when these occupancies were at somewhere between 55 to 60%. Now there is a estimate of moving it to 72%. So while you're doing a hotel audit, you can actually check that what is the average occupancy of that particular hotel. Then also the pan-India premium hotel average room rates, the ARR, ADR or the ARR, right? Average daily rates or the average room rates. This means that how many rooms are probably have been there for sale out of the total one, and what is the total revenue per room out of it. So that is somewhere between 7,200 to 7,400 average room rate, right? And this is per night rate for financial year 2024, and it's going to be 7,800 to 8,000 in the 2025. So you see that this is how the trend is going up. So market is constantly high after COVID again. Then how's the organizational structure and strategy important for a hotel business? See, first you will have to understand from the ownership and management perspective that how the ownership of a hotel is being lined up. Because unlike any kind of a manufacturing setup in a hotel industry, there are different models which are there. Right? I'll again talk about it. So it becomes very important that you use it while you are preparing your overall strategy. That what is the ownership of the hotel? Is the owner and the management one, or it is segregated, right? The management is completely separate and owners are separate. So that needs to be looked into. Departmentalization. In a hotel sector, you will see both, like any other setup, revenue generating and non-revenue generating departments. So non-revenue generating are primarily your cost centers, right? And revenue generating are going to be your profit centers. So which are our revenue generating and which are our non-revenue generating departments? So that is also very critical when you are looking at a hotel sector. IT integration. As I was telling you, I think from IT standpoint, I think it is the most critical part in the hotel audit to understand the systems, right? Because gone are the days when the manual registers are kept at a reception wherein you will have to make your guest entry, right? These days you don't make those manual entries, right? Everything is through the PMS or the POS. So PMS is basically the property management system, and POS is the point of sale terminal. So these are two systems which are used widely in the hotel industry. Now, how are these integrated? How is the input or the source data in one moving to the another? That entire chain needs to be looked at, and that is where a lot of risk lies actually, right? And as an auditor, we need to get these systems tested. Therefore, we use a lot of times IT experts to test the IT general controls. Even at an application level testing, if we have to perform, we use the IT experts. So that is important while performing the hotel audit. Now, how the organization structure for a hotel setup is lined up? You'll see it is a very different structure. The one who's heading the hotel is called a general manager. So there is one GM of a hotel. So if you go to any hotel and you see that I am facing a problem and need to meet the topmost guy, he's the GM, general manager. Then below him, there is a deputy GM or an assistant manager or an assistant general manager. Earlier, it used to be called as resident manager also. So that's the second chain. Now, below them, the head of the departments are all accommodations manager. That's for the accommodations, rooms, food and beverage manager for primarily your perishables and your food and restaurant services, the person who heads that department, executive housekeeper. So the person who is heading the housekeeping department, that's him. Financial controller, like any accounting setup, the financial controller is heading it. There is a possibility there might be a CFO there or a group CFO. That is a possibility. Purchase manager, who's heading the purchase department, HR manager, security head, chief engineer. So in a hotel setup, engineering department and project department plays a pivotal role because the entire infrastructure is built in a way to provide comfort, right, and leisure to the customers. So anything goes short there, right? There's a short circuit or there is any problem with respect to the equipments or any issue with the air conditioning, right? So or the elevator. So for that, engineering department is responsible. Then last but not the least is the IT manager. I think this is again one department, and you'll see I'm continuously emphasizing on this IT perspective in a hotel because based on my experience of the hotel audits which we perform or I've performed, uh, I think IT department is one area which is really the backbone now for the hotels, and their entire PMS, POS, everything is handled through the IT team, right? Even from their daily reconciliations, IT team lends their support. So it is important while you are an auditor to meet these people, right, and understand that how their systems and operations are moving. If you are understanding an overall hotel, it is important to meet them. Next is related to possible business structures for a hotel. So there are various business structures, as I mentioned initially, for a hotel setup. One is the owned hotel. So owned hotels are those which are owned and managed by the same entity, right? There is one group, right? Maybe a corporate, and they completely own it and manage on their own. Generally, the family-owned hotels. Then there are managed hotels, wherein the ownership lies with someone, but there is a separate management, right? The management function is through with experts. Then there are leased and licensed hotels. So these are owned by someone and then taken on lease by an enterprise who's good in operating the hotel chain, and in lieu of the annual lease rent or the license fee which they pay. Then the last and the most, I think, if you ask me, the most important and also most common these days is the franchisee affiliation or a facility management kind of an event, wherein what happens is that the owner of a hotel, he gets into a contract with another enterprise, right? Maybe Marriott, right, group or any such big group, which is having an expertise in running the hotel. And in terms, these groups charge a facility management fee, right? That's how the model operates. So there is a fee which is decided. It is based on the revenue also sometimes, and it is also based on some fixed charges. So that's the fees which you'll have to pay to these organizations, and they will manage the complete hotel in a professional manner for the owner group. That's how it is there. In fact, they will also lend the support of their IT resources like reservation system, use of their name. So a lot of hotels you will go these days, they will say that managed by Marriott. A lot of hotels are managed by Marriott these days because Marriott has got their expertise in managing the hotels. So that's how the overall structures are for a hotel while you're looking at a respective client. Now, what are the factors impacting the hotel industry? This is also important from economic perspective: inflation, interest rate fluctuations, taxation regimes, and global recession. You'll see that if a recession is about to come or on its way, hospitality sector is one wherein people tend to stop traveling or stop moving out or doing any wasteful expenditure. People, this is actually for leisure. They call it as a wasteful because sometimes they feel that we can actually curb this expenditure, right? This is not required. So first of all, these companies, they cut off on all the not so important or not so urgent travel. That's why hotel gets an impact of that. Political, we saw, I mean, during the COVID, what happened? A lot of travel was stopped, right? It was halted, and all the meetings were happening online. So you can think that how the hotel industry just dipped down that time. Critical factors. It is again very important that how the policies have been framed with respect to foreign travel and tourism, right? With respect to the interconnectedness of political stability between the in any kind of a country. I don't know. I think how much tourism is Pakistan getting right now because of their political instability, right? Similarly, India being more stable in that sense now, which is the case, you'll see that a lot of tourism is being attracted. The policies have been formulated there. Then competitive landscape. Hotel industry is such where there is highly competitive. I think the first thing which you are going to look at is the price point, right? Maybe it's a Marriott, maybe it's a Taj. Those who are but otherwise people who are going for leisure, they generally on family trip, they look for the price point. They go to the any aggregator website, right? And they are going to make my trip or yatra, and they are going to put up a filter or sort it, right, from the price point, a 5-star or 4-star category, and then low to high. So that's how the competitiveness is maintained. But on the other hand, it really controls the pricing at one point, but at the other point, it also leads to improvement in quality because of the competition. So that's the plus point of it. Another important aspect is the reliability of the suppliers, right? A hotel industry is like any other industry is completely based upon or has to rely on the supplier base or their SCM network, supply chain network. And from that perspective, because see, in a hotel, every day you would need high quality items, and these are all perishables, right? With having very short shelf lives. So from that perspective, it is important that you have suppliers who have strong standing, right? There should not be a vendor, or you should not be going to a single vendor. A hotel cannot operate through a single vendor because if that vendor shuts down the business, then it's going to have a direct impact on the hotel services. So that's why reliability of suppliers is again an important aspect. Then employee competence. So in a hotel sector, you'll see that, of course, the employee cost is ever increasing, as you know, with the inflation also. But in India, you would see that still the hotels are a bit overstaffed, right, from the efficiency standpoint. It's an average of somewhere around 2 employees per room. I think it has come out down to 1.8 now, as compared to the international benchmark of 1.5 still. Right? So I think it's still a way to go for the hotel industry in India when I talk about the managing their overall employee strength. So this really helps the hotel to have their profitability. Again, I'm coming on the IT infra. That's again an important consideration. So three important things which you should know. One is, I said, PMS, property management software, which is primarily an Opera or an Amadeus or IDS, or these are some of the common PMS for the room management. So what happens is you go to a hotel on a front desk, right? Every information they enter through the property management software. Your room details, your ID proofs are linked to it, right? With respect to your address details and anything. Also with respect to your movement in the hotel, right? If you are using any facility, everything is tracked through this. Point of sale. Point of sale software is primarily for any purchases being done, like from the restaurant, from the bar area, or from the salon or the spa facility which is there in the hotel, right? Or if there is any retail outlet. So all these are built through the POS, and this POS then gets into the PMS, and that's how this integration works. Similarly, there are industry-specific ERPs also. So like SAP has it, Opera has it, IDS again has a IDS Next is one of the very famous SAP or probably the ERPs which are used by the hotel industry, right? It covers entire front desk to back office accounting. So right from someone getting putting an inquiry for a room to his stay, to his billing, to his exit and payment, everything is linked to an ERP system in a hotel. I think I think I'll not talk about the hotels which are very small setups where these things are still manually tracked because there are very few, right? And but those all the 4 stars and the 5 stars, they had the ERP setups with them. Now, unique industry characteristics. This is again important to know because unlike other industry, hotel industry has different set of challenges and they have very different characteristics. So one is the fixed supply of rooms. So you see that in a hotel, unlike a manufacturing setup, like a manufacturing setup will have a fixed capacity, but the hotel will have a fixed supply of rooms, and there is a capacity constraint if there is an overbooking which comes. So they might tell you, okay, we can shift you to some other hotel, right? And also there is a issue that hotels sometimes take more bookings because there is a possibility of cancellation, right? So they take more bookings, and at the end, if there are no cancellations, then they will have to return the money, or probably they will have to give some kind of a premium to these people. So that's again a kind of a unique industry characteristic. Perishability of hotel services. So what hotel provides you, right? Like revenue for one room night can't be adjusted with any other room night. So today, if a room is empty, tomorrow you can't let it out 2 times and earn double, right? So you can't run a hotel in a 2 shift, as they say. So it's going 24/7 on per day basis. But yes, definitely some hotels have come out with a special discounting that probably if you don't need a proper a kind of a night stay, but for a daytime, they have their own pricing models. So that needs to be understood from the revenue perspective. Control on the leakage of revenue, right? From that perspective, maybe if I went to the spa or I've taken the service, right, any kind of a service, and then that doesn't get integrated into my room number. So that might not be billed to me, and that might be a loss or a revenue loss for the hotel. So from that perspective, it is important to look at the integration of PMS and POS and other systems, right? The person at the spa and salon, they will have their own system wherein they are going to punch the entry. They will ask me to sign off as a proof. Then it goes to the PMS and it will be reflected that I have taken this kind of a service for which this much I have to pay during my checkout. Then seasonality factor. This is a very important factor for this particular industry. That pricing or the revenue, while you are doing the audit, you might say that it's not only seasonal, but it is also dependent upon a lot of other factors like weekdays and weekends, like long weekends, right? If there is a long weekend coming in August, today you sit and check the prices will all be up by 20-25%, right? Maybe somewhere by 50% also. So that's how you need to look at it when you are performing the analytical review procedures, right? Your ARP procedures during the audit. Service charges. I think this is again a very peculiar aspect because this goes with the law, with the statute, which says that the hotel industry can charge the service charges also based on various factors. So how the accounting of service charges and the application being done, that is an important aspect in a hotel setup. One very important thing while we go for any hotel audit is to understand the fixed cost in a hotel is very high. It is almost equivalent to 70% of their cost is a fixed cost, right? Because variables are not very high. Because every day you will have to change the linen, right? And when you are changing, you'll have a fixed stock. You'll get it renewed or replenished or probably cleaned, right? And then you'll get it back. So that cost is not very high, but the fixed cost of the power, energy, right? That is very high. Your employee cost in a hotel is very high. Then even if you talk about the capital investments in a hotel is also quite significant, right? It takes almost 4 to 5 years to even recover back to what has been to become probably beta positive for any kind of a hotel setup generally. That's the reason why hotels have started outsourcing their F&Bs and laundry services and a lot of other services, right, to other brands, the famous brands. Even the gym and the wellness centers which are there in the hotel, they let it out to another famous gym chain, right, that they can run it in the hotel. I think the reason is this only that the fixed cost they would like to probably, and they link it with the number of footfalls also, right? They can accordingly cover up their cost component there. Contribution factor on revenue from rooms. So as I said that there is a low variable cost for room letting, so there are high margins. So while you're looking at the numbers, keep that thing in mind that the margins are quite high in a hotel business, right? Night audits. It's a very interesting thing. I don't know if Paras is going to talk about it in the revenue aspect or not, but yes, night audits were very critical in a hotel sector once upon a time. unlike any other industry, because a lot of reconciliation are done during the night time. So there used to be a night auditor, and this doesn't mean that me as a consultant or as an advisor will go and do the audits. There is someone who's there on the payroll of the hotel. They are performing the night audits for them. They go and check the number of rooms which are overall occupied, right? Because that's the time when people will stay in the room. Right? During the daytime, they might go out for travel or for their meetings and all. So night audits are very important to reconcile the revenue postings, to look at the overall chargeability and usability of these services, right? And then also look at the overall guest posting in the books. But now I would say that a lot of this is being automated, right? So gone are those days when the night audits are rigorously done in a hotel setup. It's all happening through the IT setup now, through the ERP. So that's one of the interesting areas. But yes, definitely, while you're on for a hotel audit, do check for this particular concept, whether they are having a night auditor or not, and what are the procedures which he is performing. Now, a lot of statutes are applicable on hotel industry, right? There is a big list of acts. If you ask me, I've just picked up some out here. Right? Other than your normal GST, Income Tax Act, and Companies Act, there is legal methodologies there, Environment Protection, Water Prevention and Control of Pollution Act, then Labor Act, Contract Labor Act, FEMA is applicable, Cigarettes and Other Tobacco Products Act, Food and Safety Standard, FSSAI, very important compliance for a hotel industry. So all these become important from the audit perspective also, that what kind of controls do a hotel industry has. Why? Because some of these acts have this strong implication that if there is a non-compliance, the hotel might get sealed, right? Or might get closed down for a due time, which might impact the overall revenue, right? So from that perspective, it is important to look at the controls for these compliances with the hotel. Now, what are the key risks in a hotel industry? In next couple of slides, I'll cover that. One of the issues which we all would probably know is the fraudulent financial reporting. That remains the risk, irrespective it's a hotel or not. Misappropriation of assets, highly there, because the assets in hotel are quite fragmented, quite smaller in number, right? Right from the iconic sceneries, right, or those pieces, the show pieces which are there, to the equipments which are there in a cafeteria, or even equipments which are there in the room, right? So there is a high risk because there is no surveillance directly on it once you have checked in, right? But yes, while you are checking out, they definitely check if anything is missing or not. In fact, a lot of provisioning is done with respect to this kind of a pilferage in the hotel sector. Then significant related party transactions, which happens if there are multiple hotels in the group, there is a possibility of transactions between them. Just to give you an example, some hotels give office setups, right, to show more occupancy or to have more occupancy during the lean period, right, to their group offices also. So from that perspective, whether the rentals have been adequately or has been at the arm's length or not, that becomes important to check. Then the compliance requirements are ever changing. As I said, it's important to track non-monitoring of internal controls. So this becomes very important. Why? Because the hotel industry is one wherein courtesy and customer satisfaction plays the very important role. But while doing this, it should not be at the cost of your internal controls. So that needs to be looked into. That's again a very important area. Unrealistic forecast commitments to the third parties, like maybe giving an annual contracts to the vendor, but you're not getting that kind of a footfall, and you have not properly planned it. That can lead to a big risk with respect to your revenue projections. High debt leverage. So in case of a hotel industry, that's very prominent. It's debt heavy generally, right? Initially. So it goes that. So from that perspective, this needs to be looked at. The overall debt servicing of any hotel. The ability or inability to generate the cash flows timely, that's most important. Of course, the project risk. Now from project risk, I mean so it needs time to create a hotel. And once you have created a hotel, maybe 50 room or 100-room hotel, then suddenly you see that after a time you need 25 or 30 more rooms, and you close down the entire setup because no one wants to go to or stay in a hotel which is under construction, right? So from that perspective, this is a high risk. That how are you planning your probably the what do you say, the renovation in a hotel. So how you're running your projects, that is again a risk, right? And also the capitalization of the expense at that time. So that's a really interesting topic of discussion. So now some sector specific risks which one need to look at during the hotel audit. One is the data privacy. So maybe I don't know how much it affects or probably doesn't affect much on your financial reporting, but overall control environment is definitely getting impacted because it's an endeavor for any hotel to prevent the data and identity theft of the guest. Under the DPDP, also the new regulations which we have got on data protection and privacy. So they also clearly mentioned that the data of the guest should not go out, right? Only if a police or a regulatory body is asking for these details, only then these details can be shared. Otherwise, the hotel cannot let these details out. So what are the how this has been kept confidential by a hotel? Because people share their ID cards also, right? While checking as per the government norms. Your passport details are also there. So this is a high risk area from the sector specific perspective. Then changing consumer demands, right? And as I said, for this industry, consumer is God, right? Atti Devo Bhava, as they say. It's important that while doing this, overall consumer satisfaction or a customer satisfaction, it becomes really difficult for a hotel to manage their cost, right? So sometimes you'll have to continuously upgrade your technology. You will have to upgrade your restaurant or your bar setup or your swimming pool based on the requirement. Then guest focused technology, right? These are the issues related to your check-ins, right? There is a possibility that you don't have to stand there at a reception. Someone has given you a link. Like I recently visited one of the good five-star hotels. They send me a link. You don't have to wait there. Just fill it up for them. Just go, collect your keys and just move to your room. So that kind of a technology has now started coming in. Hazardous chemicals and health and safety related issues. This is again a high risk area because the food they are serving and even related to the in the hospitality sector, a lot of chemicals are used for cleaning the hotel, right? From that perspective, it needs to be taken care. Food contamination. You might think that what this has to do with the probably the accounting or the auditing, but these risks need to be considered. Why? Because, for example, food contamination. I mean, there is a food gets contaminated, right? And there is an allergy because of which there is something happens or the guests use the hotel and there is an FSSAI issue and the establishment has to close down for a period of time, which is probably not clear to them. So that perspective, how are you going to provide for the cost and how are you going to look for the revenue that time? So that really is important, even from the going concern perspective. Seasonality and fluctuations in demand. I've already discussed this matter that this is a very different, what do you say, aspect with respect to this particular industry. Now, I will take you through these KPIs, the key performance indicators or analytical review procedures when you perform. What are the 3 or 4 important terms which you should be aware of? First is the occupancy rate. So while you are looking and benchmarking, right, looking at that, how the occupancy is happening, just compare it with the industry average. So an industry average occupancy in India goes somewhere between 65 or maybe 60 to 70%. And occupancy is the number of occupied rooms divided by the number of available rooms out of the total rooms, right? So for every day, every month occupancy or every week, this occupancy gets reported. So there is a complete occupancy report in a hotel, which you can ask for. Then the next important parameter and most looked at is average room rate, ADR or ARR. And the industry average here is between 6,000 to 7,000 in India right now, right? So this means the total room revenue which you have got in a month divided by number of occupied rooms. Only out of occupied rooms. And what is the total revenue? So in a way, a hotel is having a per room revenue of around 6,000 to 7,000 for occupied rooms. But a bigger aspect, which even now from the investor standpoint, they have started asking, right? If you have those kind of discussions, is the RevPAR. So that is the revenue per available room. So an industry average here goes down to 5,000 to 6,000 approximately. This is basically the multiplication of ARR and occupancy rate. So primarily, this is nothing but your total room revenue divided by number of available rooms, not the occupied rooms, right? That suppose if you have 100 rooms and your total revenue is X, so it will be X by 100. It will not be X by 100 minus what is not occupied. So that gives a clearer picture, right? And gives you a clear number. Then construction cost goes somewhere between 50 lakh to 1 crore. It depends. I'm just giving a number as per my experience when we look at the costing of the room construction. If the capitalization happening, right, or a hotel gets built up, it keeps becomes an average. Now we move to the next part, which is the audit of expenditure. I'll talk about some of the important points. And before I take you through this, let me tell you that our institute has come out with a very detailed technical guide on the audit of hospitality sector in somewhere in 2011. And I think a lot of things I've captured, me and Paras, from that particular technical guide, and we have tried to cover the most of that guide today. And from that perspective, uh, if anyone wants more detailing, you can definitely refer to that technical guide also. So the first thing is, with respect to expenditure, one of the major expenditure is travel agent commissions. So what is something which we need to check while looking at the travel agent commission as one of the expense line items? We need to look at whether the commission is not being paid to a non-existent or a dummy travel agent, right? That needs to be checked. Commission is not being paid to travel agents who are not eligible to receive them, or it is not made on bookings which did not materialize. So a travel agent booking came, but it got cancelled. So no revenue, therefore no commission to the agent. So that is how it works. So this needs to be looked at when you're looking at the travel agent commission account completely. Then also, if there is any authorization issue with respect to a higher commission paid than what we agreed with the travel agents. Generally, it is on agreement basis, but still there is a possibility that there is an exception approval for a higher commission payout. So that reason needs to be recorded there. Now, another very interesting concept comes as upselling commission, right? So we all know about an upgrade. What do you mean by an upgrade in a hotel sector? We all need an upgrade, right? Whenever be it a flight, be it a hotel, anywhere, we need the best of the seats, and we always ask for more than what we pay for sometimes. So from that perspective, the upgrade is something which is always there in a hotel. So upgrade cost is a cost to the hotel, where I, as a customer, goes to a hotel and ask for an upgrade. But an upsell is something which a hotel deliberately does. So someone on the front desk, when you move in, they will say, "Sir, welcome, sir. Today we have an offer running that you might, if you want, we can upgrade you to this room category at this much of the price." So that includes the commission, right, which these people get for upselling, because that room is vacant, and that room can get them higher revenue than a room which is of lower category. So that is something which basically an upsell means. So then complimentary airport transfers, be it might be complimentary, but ultimately it has to be mapped with the office check-in, right? That your front office has to have that system wherein if an airport transport or a transportation has been arranged for someone, the cost needs to be apportioned on that particular room occupied. So that systems are generally there. If not, this control needs to be evaluated. Then guest amenities, right? That in terms of that, when are we recognizing the expense? It is very important, right, for the amenities. Be it your soap, be it your the towel, or be it the linen, or anything which we order in the room, right, which belongs to the hotel. So once it moves out from the stores, right, and it goes to the housekeeping or the F&B, it becomes a cost to the hotel. They are going to book it. It is not that they are going to probably depreciate in a way, right? There is a separate policy depending upon the usability or the useful life of the linens and all that can be done. But generally, it is all capital. They are all expensed off within the year, and it happens at the time it moves out of the store. Now, cost and related control. Daily cost report is very important in and it is maintained rigorously, right? It is having the reconciliation of the daily food cost report. At how much cost have you, because there is a lot of wastage which happens in this industry, right? And then there are orders which are not accepted and returned back also. So from that perspective, there is a reconciliation prepared, ask for that report, which is called a daily cost record. And then map it with the monthly financials, that whether they are matching with that or not, the number which we are showing there. If the wastage is quite high, we need to probably ask the question and also map it with the industry norms with respect to the wastage. So this is a place wherein you need to do probably the review of controls, and also you need to have the analytical review procedures need to be performed. Then breakage of CGX. CGX is an important term in this industry, which is crockery, glassware, and silverware, right? So whether the breakage or the loss is as per the industry norms or not, or as per the established standards or not, in a hotel. Purchases, it's important. We have to assess the adequacy of internal controls for purchases, and specifically for the annual rate contracts which are agreed, right? So basic checks which can be performed is whether there is a purchase committee or not, right? Whether people from different divisions are added in the purchase committee to avoid a kind of SOD conflict, right? If someone from the purchase is taking all the decisions, there might be a risk. So someone from finance, HR, or admin also becomes a part of the purchase committee, because these contracts are quite significant in volume, and this accounts for a considerable cost component in your P&L. Then how the negotiations are happening. Is the contract going to the L1 vendor or not? If not, whether the comparative sheets are prepared, and the reasons for not giving to the L1 vendor, maybe quality or his market standing can be the reason, has to be recorded. PO controls are very important. PO has to be linked with the PR and with the GRMs, right, in the hotel sector to control, because there is a lot of regular based procurements which are happening in the hotel. So two types of procurement. One is the planned one, and one is for the exigency, right? Whenever there is an emergent or the urgent procurement that happens. And then there is one which is based on the initial agreed or as per the plan through the PO. Then vendor evaluation is properly performed or not. If the vendor is considerably giving value or not, that needs to be looked at. So this is majorly from the internal control perspective. Then monitoring of the stock levels. So hotel have high stocks of liquor, they have high stocks of generally the goods which are maintained, but since they are perishable and they have a shelf life also, especially food items. So important to look at the reorder levels, or the maximum order quantity or the minimum stock levels have been defined. Because if you don't have the maximum order quantity defined or the minimum level defined, there might be a case that you can have a situation of a stock out, or you can have overstocking, right? In both ways, it can lead to an inventory loss, which needs to be looked from the audit perspective also. Then receipts of goods to a responsible person and through a GRM. There is a proper GRM being done for the same or not. And in case of banquets, the hotel also have banquet facilities, as you know. So how the banquet revenue is considered, that my fellow speaker Paras can probably speak more about it. But the expenses are all routed through a prospectus. So like if you go and take any quotation for throwing up any meeting or any family function or a wedding in a banquet, so they give you a complete rate card and they prepare a kind of a proposal for you. So it moves as per that, whatever you finalize. But if in case there is any change, because based on a revenue which is fixed, the cost is calculated for that particular any function in a banquet. And accordingly, there is a calculation being done for the this cost, that how much is the overall cost amount, and accordingly these expenses are accounted for. So that's the banquet sundry. Rent, it's common, it goes as per the terms and conditions of the agreement, right? Rent provisions have to be made in the books on timely basis. Payroll costs, right? Then payroll, I think this is one area where I would probably like to talk a bit more, is that hotel industry is primarily reliant on a lot of workers, right? They are contractual workers also. So one issue which we have generally noted is that there is an existence of the ghost workers, that maybe a contractor is giving you bills of or charging you more than what he's supplying to you. So linking of your biometric with your floor attendance, with your invoicing, this process needs to be looked at, because that can have a direct implication of your the payroll cost. Right? That's a very high risk area, and even from the fraud risk perspective. Then in circulation inventory, as I mentioned, that any inventory of linen or glassware or silverware, that's an in circulation inventory. Once it is out of the store, it is accounted as consumption at the time of issuance and not shown in the inventory at all. This is called as a circulation inventory. There is a separate report which is prepared to look for the usability and the life and also the existence. Then we move to the cost related risk and control. So these are some of the important things which I have picked up from the technical guide which ICAI has issued, that the verification or risk verification of liquor stock on daily basis. So as I said, liquor stock is a very high value stock for any hotel than any kind of a food related stock items, right? So from that perspective, the daily liquor reconciliations are generally performed, right, by the person or by the bartender or the person who's heading the bar. And it has to be compared with the physical quantity. There is a random check being performed, not only of the number of bottles, but also the density check, right? So there is a measurer taken and checked that if the measurer is right or not, and how much is the overall quantity being accounted. Then monthly physical verification of stored inventory not being conducted. This is a high risk, right? Generally, an F&B controller verifies the inventory monthly, and any slow moving or expired inventory is separately tracked. So in hotel industry, slow moving and expired needs to be identified for the provisioning purpose. That needs to be looked at. So, and then there is a regular reporting from the store side also of these kind of inventories. Cost consumption report not generated or monitored. This is important because food cost is charged daily basis on outlet, any outlet. Like there may be 4 or 5 different restaurants, right? There is a daily food cost report which is generated. So, and that is also reviewed by the financial controller. Then no system of reporting on costs. So generally, there are various type of analysis which a hotel performs, like RM cost to F&B sales. How much is my cost to my sales, right, in a restaurant? Then how much is my food cost to my food sales? Then also my complementary cost to F&B sales. So these are some of the analysis which are being performed. Non-moving stocks. So the fresh orders should be generally, the hotel should not be ordering much without looking at their existing stock levels, right? That needs to be looked at. As I said, slow moving and non-moving inventory needs to be looked at, and there has to be an aging performed at the hotel side. Inventory pilferage. So this becomes important during the any periodic physical count which happens in a hotel, right? This needs to be looked at, that if there is any inventory shortage due to pilferage, that needs to be identified and reported separately, right? There is a standard again norm of pilferage which goes maybe between 2 to 3%. It should not be more than that. So that needs to be looked at. If it is more than that, that needs to be assessed and to be reasonable. Then no independent certificate inventory counts being carried out. I mean, this is one of the issues at the F&B side, that inventory counts are not properly done or maybe done by the same person who's in charge. So there has to be a separate team, accounts team or an internal audit team should be engaged in this kind of periodic to be reported upon. Now we will move to the last part of my session before I hand it over to Paras. That's on fraud related matters. So we have already discussed from the costing perspective that what all can be covered. Now, from the fraud risk perspective, hotels are not spared like any other setup. They too have this fraud risk assessments to be done. Now, fraudulent financial reporting and misappropriation of assets. These are two important fraud risks which we will talk about. So from the fraudulent financial reporting perspective, we need to look at the tone at the top. This all happens when you are performing your routine interviews, right? Need to understand that primarily how the management is setting the tone. What is their style and attitude related to internal controls? You'll see a lot of hotels wherein probably the internal controls will take the backseat, but then there are good brands which are giving a lot of focus on the internal controls, right? They talk about the internal controls like stock checks, like tagging of their assets and all that kind of controls. So from that perspective, it becomes important. So tone at the top is definitely important. Then from that perspective, I'll talk about two things which can lead to any kind of a fraud situation, right? One is the opportunity and second is the pressure. So any fraud which occurs happens because of there is either an opportunity for the perpetrator or there is a pressure, right? So pressure, if I have to talk about in this particular sector, is definitely the high bonuses of those GMs and persons who are under them. So from that perspective, they sometimes have to take the aggressive targets, right? So even the forecast, sometimes they are unable to forecast the overall occupancy properly, and because of which, and as I said, there is a fixed cost which is already incurred in a hotel sector, which is a greater chunk of your overall cost. So profitability gets a massive hit. So that needs to be looked at. Tax reduction is another area wherein there can be a pressure from the top that look from that perspective, that how can we work on the tax reduction perspective, not the planning I'm saying. So that needs to be looked into. Then opportunities, if I say, I think what kind of opportunities come up, management's attitude towards internal control, as I said, is very important. That there is a issue or there is a possibility of a fraud if you see that management is indifferent about pilferages, about the liquor shortages being regularly reported by the internal auditor. So this gives a kind of what do you say, a feedback, or it comes to as a tone of the management is not very towards auditors, right? So like I mentioned, the third point, management auditor relationship. So if you see a lot of fighting happening between the management and the auditor, and the audits are getting delayed, and because the data is not being provided, or hotel is saying that we can't extract this report or we can't extract that report. So these are all kind of red flags which one can look for. Then turnover of the management or the board members. So if there is a very high turnaround, right, of the board, or probably the management is not fixed, people are regularly changing, that is again an opportunity. Even if not having a proper corporate governance structure, not having independent people or people who are not competent is another opportunity, which is a breeding ground for a fraud. Then industry conditions, right? It pertains to economic and regulatory environment in which the hotel operates. It relates to the operational challenges primarily, right? What kind of operational issues the hotel is facing, what kind of how the industry is moving, right? That also is really different. Like in COVID, a lot of bookings started happening online, right? There were no direct drop-ins, right? So there was a social distancing being maintained. So because of these kind of aspects, right? So there can be operational challenges. Then operating characteristics and financial stability is another area. Like how are you estimating the future cash flows? What about the related party transactions? How are you covering it through your transfer pricing, or maybe arm length pricing for the same, right? And how complex is your interdepartmental structure which you have created, on org structure which you have created? So all these needs to be looked at while one assess the fraud risks, right? From the misappropriation of assets perspective, there is definitely an issue of or the possibility of assets to theft, right? Which can lead to maybe a large amount of cash is there in the hotel. A lot of people pay in cash, right? Though it has gone down considerably after UPIs and cards are being used everywhere. But still, that's one area. So daily cash reconciliations need to be performed. So there should not be a case wherein there are regular differences being noted in terms of the actual cash and the books, cash in books, right? At any given point of time. So that is one thing. Then inventory characteristics, because inventory in hotel, as I said, might be small size items which can easily move in anyone's bag and can be taken out. So that needs to be looked at, right? Fixed assets characteristics, small size combined with marketability, right? And the assets are such, right? Like a small coffee machine in the room, that is there is a possibility to theft. So these kind of fraud risk always are there. Absence of internal control, and also fraud risk from the perspective of capitalization. That while a capitalization drive is carried out or a renovation is done, it becomes very important for the auditors to collect the complete evidences with respect to the proportionment or apportionment of capital expense and the revenue expense, revenue nature expense. So anything which is increasing the probably the earning capacity or the capability of an asset to perform has to go to the capitalization. Otherwise, it goes to the revenue item. So, like I said, those regular items which are there once given to the stores and consumed from there, they are all expensed off. Otherwise, other items are all they're into the capitalization. Absence of internal controls. So I think I've spoken much about internal controls, but still, I think lack of procedures to screen the job applicants while you are hiring them is a major issue, right? Because your assets are then prone to misappropriation. So that becomes an important risk. Lack of segregation of duties or independent checks, that is definitely an issue with the hotel sector. So I think I've taken my due share of time. I would have probably spoken more about it, but I don't want to uh, keep my fellow uh, speaker waiting, Paras. So if there are any questions, we'll be happy to take it in the end. Meanwhile, I'll ask Paras to please take it forward. Thank you. Over to you,
Sure,
Paras.
Gaurav. Please let me know whether my screen is visible.
Yes, Paras, I can see your screen. Please go ahead.
Thank you so much. So first of all, I would like to thank Chairman Sir and AASB team for giving me this opportunity. And I would also like to thank moderators of the day and my fellow speaker. So without further ado, let's get started. So Gaurav has already explained about the fraud risk and the controls and the audit of expenditure. And hence, I am going to cover how to do the audit of revenue. But before directly jumping into the slide of audit of revenue, we need to understand few other things as well. So this is our agenda, which we are going to discuss now. First one is critical objectives, which an auditor should adhere. Then second one is key revenue generation activities. Then risk assessment. And fourth one is audit of revenue. After that, we will discuss few analytical procedures with respect to revenue, and I have included CAM and accounting policy as well. So first point is critical objectives, right? So like any other audit, while auditing the financial statements of a hotel, an auditor should ensure that all the standards on auditing are complied with. And some of the critical objectives which an auditor should adhere are: obtain the preliminary knowledge of the industry, nature of business ownership, and management and operation. So this point has been explained in detail by Gaurav. So second one is, in accordance with SA 300, an auditor is required to establish an overall audit strategy that sets the scope, timing, and direction of the audit. So basically, an auditor is required to develop a audit plan. Then, in accordance with SA 315, an auditor is required to identify and assess the risk of material misstatement, which is commonly known as ROMM, right? Whether due to fraud or error at the financial statement and assertions level through the understanding of the entity and its environment, including entity's internal controls. So internal controls play crucial role in the hotel industry. Why? Because most of the guests make the payment in cash, right? And on the other hand, hotel has lots of items in its inventory which are small items, including cutlery items. So hence there is high chance of pilferage, and therefore internal controls play crucial role in the hotel industry. Then in accordance with SA 330, an auditor is required to make the responses to assessed risk at the assertion level, right? And in last, we can say audit process has to be divided into three categories. First one is risk assessment, which will be identified as per the provisions of SA 315. Then risk response, which will be made in accordance with SA 330. And last one is reporting. And reporting will be made as per the provisions of SA 700, 701, 705, 706, whichever is applicable, basis the audit evidence obtained by the auditor while conducting the audit and conclusion formed. Correct? Second one is key revenue generation activities. So unless and until we are aware about the different sources of revenue which an hotel industry has, we would not be able to perform our audit efficiently and effectively. And hence, what I have done, I have mentioned different kinds of revenue stream and its basis as well. So first one is room revenue. Room revenue constitutes almost 50 to 60% of the total revenue, and it is generated from the letting out of the rooms. And billing is done through PMS software. So about PMS software, Gaurav has already explained. Second one is retention charges. So it is collected from guests for either cancellation of reservation or non-arrival upon the reservation. So it is a kind of penalty, and hence it cannot be classified as room revenue. Third one is food and beverage revenue from restaurant. So F&B revenue constitutes almost 20 to 30% of the total revenue. And this is generated through sales in restaurant, and billing is done through POS software, which we have already discussed. Normally, F&B income is charged on the basis of food served, but it is also apportioned from a composite charge through a process called meal plan apportionment. Now, there could be two types of scenario. Let's assume under scenario number one, guest is having package in which breakfast and dinners are not complimentary, correct? And let's assume he is paying 5,000 rupees as room charge. On the other hand, under scenario number two, let's assume guest is having package in which room rent, in which dinners and breakfast are complimentary, and hence guest is paying 6,000 rupees. So under scenario number two, we need to bifurcate the total revenue between the room revenue and the F&B revenue. Why? Because as per the provisions of Ind AS 115, there are two distinct goods and services. There are two performance obligations, and hence composite charge is required to be bifurcated between the room revenue and the F&B revenue. Then next one is F&B revenue from minibar. So you guys must have seen that most of the hotels keep minibar stocked with liquor, soft drinks, snacks, etc. And these are normally billed based on the self-declaration made by the guest by filling up the form which is kept in the minibar. And while replenishing, minibar attendant checks the consumption and bills. Next one is F&B revenue from banquets. Normally, rates are offered per cover basis, per person basis. So you guys must have seen that banquets generally charge 1,500 rupees or 2,500 rupees or 5,000 rupees, depending upon the item, quality, and standard of the banquet. It is a composite rate for F&B and whole hire. Banquet billing is normally billed on a guaranteed covers if actual cover is less than the contracted. Suppose you have already provided a guarantee that 100 people will attend the function or the meeting, as the case may be, but in actual only 80 people attended the function, right? In this scenario, banquet will raise the invoice for 100 people and not for the 80 people. Why? Because you have already provided the guarantee for 100 people. And third one is hotel can offer hall hire separately in case rate offered is not composite. Next one is car hire income. So normally car rentals are facilitated by the hotel through dedicated travel desks, which are normally outsourced to a travel agency, right? And guest hires car and hotel gets its commission based on the hire charges earned by the agency. Next one is arcade revenue. So most of the big hotels provide the shopping space to the outlets at lobby level or in the public area at fixed monthly income. But if rental is linked to the billing done by the outlets, then in that scenario, control in those cases must be robust to ensure that there is no leakage of revenue. Next one is health club, spa, beauty parlor revenue. Health club and beauty parlor revenue is booked based on the guest serviced. An appointment register is maintained for all the guests who seek the appointment for service, and upon service, guests are billed in the POS software. In some hotels, membership fees are received for use of health club by members. This fees is apportioned over a period of membership. Now, I want to spend a couple of minutes here. There could be two types of scenarios. Let's assume gym is receiving the membership fee from its members, right? And against this fee, gym is providing t-shirts, protein shake mug, and all those stuff, right? And hence, in this case, this membership fee should be recognized in the P&L account immediately once the control of these products have been transferred to the members. In contrast, it might be possible that gym is not being provided anything to the members, and hence in this scenario, membership fee should be recognized over a period of time. Why I am highlighting this point? Because last year, one of the big brands in the hotel industry received a notice from NAFRA that the accounting policy with respect to membership fee was not correct. And hence, we need to be more vigilant while framing the accounting policy, not only for membership fee, but also for other components of the financial statements as well. Next point is laundry revenue. Laundry is provided to resident guests and employees. In some hotels, outsiders are also allowed to use the laundry service through club membership like Fabric Care Club. Billing is done in POS software, and in case of rate revision, master data is updated. So if the rates have been revised during the year, then master data needs to be updated to ensure that there is no leakage of revenue. Correct? Next one is disposal of sale of scrap. So hotels have lots of scrap. It could be in the form of empty bottles. It could be in the form of empty cans and all those stuff. And normally sales of this scrap are made through annual rate contract process. Correct? Now we have understood different kinds of revenue stream, and hence now we need to assess what could be the risk related to the revenue. So these are the possible risks which I have mentioned related to the revenue. First one is non-recognition of revenue by providing unauthorized occupancy of rooms without showing check-in in PMS software. So it could be possible that front desk team has provided few rooms to guests, but their check-in has not been disclosed in the PMS software, and hence there is risk of loss of revenue. Second one is incorrect rate charged package used, due to which revenue is short collected. Suppose front desk team was required to be charged 5,000 rupees as room revenue, but they have charged 4,500 rupees, and hence there is a short of revenue. There is a loss of revenue. Next one is providing rooms on complimentary basis when rooms are not required to be provided so, but have been provided. Next one is unauthorized waiver of fully or portion of charges leading to loss of revenue in any name like discounts. Suppose front desk team has provided 5% discount or 10% discount or any other discount to the guest, but they were not authorized to do so. Next one is incorrect revenue accounting in the general ledger due to interface issues from PMS to financial accounting system. Suppose a wrong journal entry has been passed in the ledger. Next one is non-recognition of actual cash settlement made by the guest, thereby leading to fraud risk. So as I told you, most of the guests make the payment in cash, and if the front desk team has not settled the account by utilizing the cash, in this scenario, there will be loss of revenue. Now we guys are ready to apply the audit procedures with respect to the revenue. So what I have done, I have mentioned the risk description and the audit procedures. So first risk is room charge not charged, but rooms let out. So in this case, auditor needs to check whether room revenue has been charged for all rooms occupied during the day. Correct? This check is to be carried out by checking the spool report general for the day from PMS software. So if spool report is generated from PMS software, which contains information about the reservations, bookings, status of the room, and all those stuff. And by checking this spool report, auditor would be able to identify the status of the room, whether revenue has been correctly recognized in the books of account for the rooms occupied or not. Next one is the check should specifically cover the following: all the guests in house at the time of night audit. So as Gaurav explained, night audit is a widely prevalent term in the hotel industry, and it is a basically procedure which is performed by the management after business hours to check whether revenue has been correctly recognized for all the rooms which have been occupied. And auditor is also required to check revenue has been booked for all the guests who have checked out during the day. Correct? Next one is room charge not charged, but rooms let out. Special cases. What are the special cases? Let's discuss. Wherever room revenue has not been charged for occupied rooms, check whether they fall in the following category. First one is complimentary, second one is house guest, third one is late checkout, fourth one is early check-in, and fifth one is day use guest. So in case of complimentary and house guest rooms, auditor needs to check whether necessary approvals in accordance with the corporate circular exist and they appear in the complimentary report printed and circulated to the general manager, finance manager. So what is complimentary room? Suppose a guest has taken 10 rooms on rent, correct? And he is asking for another room as a free of cost. So this another room will be called as complimentary room if it is provided by the front desk team. On the other hand, house guest rooms are those rooms which are kept by the hotel for the use of their employees and other staff. So these employees could be permanent employees, these employees could be casual employees, right? But amount is, or you can say revenue is not charged from the employees of the hotels, and auditor needs to check whether appropriate approval in accordance with the corporate circular exists. Next one is late checkouts. So we all know that checkout time in hotel industry is 12 p.m. noon, right? So in case of late checkout, whether half day or full day charge is in accordance with the late checkout policy of the hotel. So suppose a guest checks out at 2 p.m. So he is using the room for additional 2 hours, right? And in this case, auditor needs to check whether half day or full day charge levied is in accordance with the late checkout policy of the hotel. Next is whether waiver of half day, full day charge is in accordance with the late checkout policy of the hotel or not. So if any waiver has been provided, then it should be as per the policy of the hotel. And if the waiver is not in accordance with the policy, then auditor needs to check whether the same has been duly documented and approved in accordance with the corporate circular. Next one is early check-in. So early check-in time is also 12 p.m. noon, right? And suppose if any guest checks in at 10 a.m., then he is using the room for additional 2 hours, right? So in this case, auditor needs to check whether half day or full day charge levied is in accordance with the policy of the hotel, whether the waiver of the half day, full day charge is in accordance with the early check-in policy of the hotel. And if waiver is not in accordance with the policy, then auditor needs to check whether the same has been duly documented and approved in accordance with the corporate circular. Next one is day use guest. Who is day use guest? Day use guest is a guest who takes room on hire for a period which is shorter than the full day. Means for few hours, for 2 hours, for 5 hours, or for 6 hours, right? But not for the full day. In this scenario, auditor needs to check whether the room revenue has been charged for full day use, correct? And if any waiver has been provided, then whether the waiver of the half day, full day charge has been duly documented and approved. Next risk is audit of unauthorized use of rooms. Means the front desk team has provided one room to the guest, but their check-in has not been disclosed in the PMS software. So in this scenario, auditor needs to review the registration cards for their completeness. He needs to check whether room discrepancy report has been prepared and documentation for resolving the discrepancy. So room discrepancy report is generated through software in which status of the room is mentioned by the front desk team as well as by the housekeeping department. And in case any discrepancy is found by the auditor, then this discrepancy should be asked and it should be properly documented. Then auditor needs to check whether key checks have been carried out by the authorized person and documented. Suppose there are 50 rooms in the hotel, and as per the front desk team, 40 rooms are occupied and which have been disclosed in the PMS software as well. But in this scenario, 10 keys must be available with the front desk team. And suppose if there are eight keys are available, so there something is wrong there, and hence reason for the same should be asked by the auditor. Next risk is incorrect rates charged, leading to loss of revenue. So auditor needs to check the rates charged, especially ad hoc rates, the rates based on the best available rate with the appropriate approval. Rate variance report approvals in case of approvals in accordance with the corporate circulars for ad hoc rates. So suppose front desk team was required to charge 5,000 rupees, but they have charged 4,500 rupees, right? So in this scenario, auditor needs to check whether appropriate corporate circulars are there or not, and approvals are there or not to resolve this discrepancy. So for this purpose, rate variance report is generated, which contains the information about the rates which should have been charged and the rates which have been charged in actual. Next risk is checkouts not billed and not settled. So for all checkouts during the day, auditor needs to check whether bills have been raised and duly settled in the PMS as credit card settlement, city ledger settlement. So city ledger is nothing but the debtors ledger, and cash settlement. So we will discuss all these 3 points one by one. So first one is credit card settlement. And what is the risk? Risk is credit card settlement not properly done. So in this case, auditor needs to check credit card charge slips in case of billing is done through PMS software. And when the billing is done through POS software, again, he needs to verify the credit card charge slips. And he is also required to match this slips with the EDC summary sheet. So EDC summary sheet is generated when the payment has been made through credit card. And this summary sheet involves, this summary sheet contains lots of information, means what is the credit type, what was the transaction date, what was the transaction type, what was the amount, and all those stuff. So in all this scenario, auditor needs to check the credit card charge slip. Next is city ledger settlement without billing instruction. So what happens generally? Large corporations have tie-up with the hotel industry because their employees frequently visit from one place to another place, right? And hence, in this scenario, auditor needs to check whether all bill settlements to city ledger, there is a billing instruction or the party is a credit listed party, because the payment will be made by those corporations after 30 days, after 60 days, after 90 days, as per the negotiation agreed by them. Second point is that auditor needs to check for guest signature in case of credit customers and ensure that all city ledger settlements have been duly posted to the city ledger, means the ledger of the guest has been transferred to the debtors account. Next one is cash settlement not accounted in cash book or paid outs not charged. So in this scenario, auditor needs to check whether all paid outs as per PMS report with the paid out slips and check for guests acknowledgement and duty managers approval. So what are the paid outs? Paid outs are nothing but the expenses incurred by the front office on behalf of the guest, like car hire charges, right? So all these charges should be included in the bill of the guest, and auditor needs to tally the cash settlements with the cash summary and the cash book. Next one is forex settlement. And what is the risk? Wrong rates applied, right? So it might be possible that foreigners have been staying in the hotel, and in this case, auditor needs to check whether correct foreign exchange rates have been updated in the system and the same are applied for billing and settlement. So if the payment is made by the foreigners in the foreign currency, then auditor needs to check whether the same has been duly updated in the system and the correct rates have been applied for billing and settlement or not. Next is checkouts without settlement of bills but keeping bills. So in this case, auditor needs to review bills on hold and ensure that they are transferred as per the corporate policy to the city ledger. Check bills are periodically raised for long stays. Correct? Next one is charges being unauthorized discounts. So auditor needs to check front office allowances are as per PMS report with its base document, reasons, and the approval for the same. And auditor is also required to review and confirm the correctness of the manual posting in the system. So manual posting should not be there in the PMS software, but in case the right has been given to any authorized person, then auditor needs to review and confirm whether the manual posting done by this person is correct or not. Next one is IT controls. So in this case, auditor needs to review the user's log to identify exceptional and unusual events logged by the system. Special emphasis to be given to the uses of the following: deletions, transfer, moves, modification, and splits. So in this case, auditor might have to involve their IT experts to identify whether any exceptional or unusual events are logged by the system or not. So basically what the auditor is doing, checking the database controls, right? Next one is rate master maintenance. Rate codes wrongly updated. So in case rates have been revised during the year, then the auditor needs to check whether the same have been updated in the rate master correctly or not. Check creation of new department codes in the PMS. So suppose any new department has been created by the hotel, and in this case, auditor needs to check whether the proper codes have been allocated to this department or not, to ensure there is no leakage of revenue. Second is audit of F&B revenue. So until now, we have discussed all the points related to audit of room revenue. Now we will discuss points about the audit of F&B revenue. So first risk is that incorrect billing of revenue. So in this case, auditor needs to check whether sales as per POS software tallies with the entries posted in the PMS software. Second, check whether all bills have been received from the outlets for the sales made during the day. Correct? Third, check void bills report to ensure the original void bills are physically available and the same have been approved by the restaurant manager, F&B manager, and the counter chef. Next one is that auditor needs to check whether there are any open bills, and if yes, approval and reasons for the same have been obtained and duly documented. So basically, auditor needs to ensure that all the income which should be recognized with respect to sale of F&B has been correctly recognized or not. And if it has not been recognized correctly, what is the reason? Auditor should document it. Next one is non-billing of F&B served or short billing. Auditor needs to check whether duly approved complimentary slips are available as per the corporate policy for the complimentary. Auditor needs to check whether gift voucher discount coupons are attached to the food bills are duly defaced. So it might be possible that guest is having some kind of gift vouchers, discount coupons, right? And auditor needs to ensure that once this discount coupon or the gift voucher is consumed, then management duly defaced these vouchers. Correct? Third one is wrong appropriation of income between F&B and room revenue. So this we have already discussed. Auditor needs to bifurcate the amount of composite revenue between the room revenue and the F&B revenue. Fourth one is rate master updation. So in case rates have been revised during the year with respect to F&B, then auditor needs to check restaurant rate codes have been updated in the menu card and in the system as well. Next one is audit of banquet revenue. So what is the risk? Risk is for wrong rates or unauthorized discounts or terms. So in this case, auditor needs to check whether banquet contract is entered as per the corporate circular of the hotel. He is also required to check whether the rates are fixed as per the corporate circular, and necessary approvals have been taken with regard to discounts, if any. So if any discount has been provided to the guest, then auditor needs to ensure proper approval has been taken with respect to the same. Second is billing for quantity less than what has been guaranteed. So auditor needs to cross-check the function prospectus with the banquet challans and check the correctness of the billings. So function prospectus is a document which includes all the details about the items which are required to be added in the menu, all the activities which will be performed by the banquet. So auditor can cross-check whether all the items which were required to be included or all the activities which were required to be performed by the banquet has been billed or not. Second, check if any modification has been made in the function prospectus or banquet challan, then it is duly approved by the banquet supervisor and guest to avoid any kind of dispute in the future. And third one is that if any changes in the guaranteed packs, that is covers, have been duly approved by the banquet sales manager and the F&B manager. Third one is incomplete billing. So in this case, auditor needs to check whether bills have been raised for all the banquets activities for the day and they are supported by the banquet challans duly signed by the guest. Next one is audit of other revenue. And what is the risk? Risk is for non-billing. So auditor needs to check all the bills are as per the sales summary received from the different outlets. Check all the settlement modes and cross-check with the respective controls. And in case of manual bills, auditor needs to ensure the serial number, continuity of the bills, and ensure it is duly posted in the PMS software. As the auditor cannot do the 100% vouching, and hence it becomes very important to perform analytical review to get the comfort that revenue has been correctly recognized in the books of account by the management. So these are the few analytical review procedures with respect to revenue only. So first one is that auditor needs to compare the monthly room rent revenue with the budgeted amount and with the revenue of the corresponding month of the previous year. So suppose you are auditing the revenue for the month of June 2024, right? In this scenario, you should also check what was the budgeted revenue for this month and what was the revenue in the month of June 2023, right? And in case of any significant variance, you should ask what is the reason. You should ask from the management what is the reason for the same. Second, compare monthly room rent revenue with the revenue computed on the basis of industry occupancy rates and occupancy rates for the month. So I think Gaurav, Gaurav has already covered this point. So I am not going to spend much time here. Third one is that carry out the check on the room rent revenue by considering the industry trends and the room rates charged by the hotel. Suppose you are doing the audit of a 5-star hotel, and let's assume this 5-star hotel is charging 5,000 rupees for its executive room, right? In this case, you need to perform the benchmarking as well, and you should check whether other 5-star hotels are also charging the same revenue, same room rent for its for their deluxe room. And if yes, then there is no issue. But in case of any significant variance, you should ask the reason from the management why you are charging such a higher amount or such a lower amount, as the case may be. And fourth one is that compare and analyze the monthly relationship of F&B revenue with the room rent revenue. Besides comparing actual F&B revenue with the budgeted revenue and revenue for the corresponding month in the previous year. So this second line we have already covered here. First line we need to discuss. Compare and analyze monthly relationship of F&B revenue with the room rent revenue. So let's assume in the month of Feb 2024, this relationship was 25% and 75% respectively, correct? But in the month of March 2024, there is a significant decline in this relationship, and this relationship has become 5% and 95% respectively. And hence, in this scenario, you should ask the reason from the management why there is a significant decline in this relationship. And fifth point, we have already discussed, obtain the necessary information and explanation from the management in case of major variances. All these 5 points which we have discussed need to be applied in case of banqueting income as well, right? So by performing analytical review, auditor will be able to get the comfort that revenue has been correctly recognized by the management or not in the books of account. Next one is key audit matter, that is CAM. So what I have done, I have extracted one CAM from one of the annual report which is available in the public domain to give you an idea that how you can include a CAM in your audit report while you are drafting your audit report, right? So CAM is here, and the procedures which the auditors have performed are also mentioned here. So CAM is that the company is principally engaged as a hotel owner and the property owner. Its revenue comprises hotel revenue, including room revenue, F&B revenue, and other hotel related revenue, and rental income from the investment properties. The accounting policies for the different revenue streams are set out in the accounting policy to the standalone financial statements. Revenue is a key performance indicator of the company, and there is a risk of overstatement of revenue due to fraud resulting from the pressure to achieve targets and earning expectations. So until now, we have discussed the risk about the loss of revenue. But here is a reverse case. They are saying that there is a risk of overstatement of revenue. Why? Because it might be possible that increment and performance bonus of the management is linked with the targets achieved. And hence, there is a risk of overstatement of revenue. Management can overstate the revenue in the books of account. So auditor is saying, based on the above, we have identified revenue recognition as a key audit matter. Now, the audit procedures included the following, means the audit procedures which the auditor has applied are also mentioned here. So auditor is saying that he has tested the company's revenue recognition accounting policies and its compliance with Ind AS 115. So they have checked the accounting policy with respect to the revenue recognition. Second, tested design, implementation, and operating effectiveness of the controls assisted by IT specialists of the revenue recognition process. So they have involved their IT experts as well. Tested the general information technology controls and key application controls surrounding the revenue recognition. Auditor has also tested on a sample basis revenue recognized in the correct financial period by tracing it to the invoice, receipts, etc. Auditor has also tested the adequacy of the disclosures relating to revenue recognition in the financial statement. So all the disclosures which should have been disclosed in the financial statements as per the provisions of Ind AS 115, whether the same have been disclosed or not, or the auditor has tested the adequacy. Then tested on a sample basis invoices recorded during the year for identification of point in time for the transfer of control to the customer. So on sample basis, they have tested whether the revenue is being recognized once the control is transferred to the customer. And last one is that auditor has performed substantive analytical procedures, which we have already discussed including year-on-year variance analysis and cash to sales reconciliation for the financial year. Correct? So this is the CAM which have been included. This is the CAM which has been included in the annual report of a listed company, right? And which pertains obviously to the hotel industry. Similarly, I have extracted accounting policy as well. So accounting policy with respect to revenue recognition is that revenue is recognized at an amount that reflects the consideration to which company expects to be entitled in exchange for the transferring the promised goods or services to the customer. On a transfer of control of goods or services to the customer means once the transfer of control of goods or service is made to the customer, then revenue is recognized by the management. Revenue from sale of goods or rendering of services is net of indirect tax, obviously because you are collecting the GST on behalf of the government, and hence it should not be recognized as a revenue in the books of account. So they are mentioning revenue from the sale of goods and rendering of services is net of indirect tax, returns and variable considerations on account of discounts and schemes offered by the company as a part of the contract. So suppose if any discount has been provided by the management, then it is netted off from the revenue. Then with respect to room revenue and F&B and banquet revenue, the management has mentioned that revenue is recognized at the transaction price that is allocated to the performance obligation. Revenue includes room revenue, F&B sale and banquet service, which is recognized once the rooms are occupied. Revenue with respect to rooms are recognized when the rooms are occupied. F&B are sold and banquet services have been provided. Correct? Next one is space and shop rentals. So with respect to the same, rentals basically consists of rental revenue earned from letting of the spaces for retails and office at the properties. These are generally of short term in nature and revenue is recognized in the period in which services are being rendered. Correct? Next one is other allied services. So in relation to laundry income, health club income, other allied services, revenue has been recognized by reference to the time of services rendered. So once these services have been rendered, then revenue is recognized in the books of account. And last one is membership fee. Membership fee income majorly consists of membership fee received from the loyalty program and chamber membership fees. In respect of performance obligations satisfied over a time, revenue is recognized at the allocated transaction price on a time proportion basis. So we have already discussed that if the distinct goods are not being provided against the membership fee, then this membership fee should be recognized over a period of membership. And the same has been mentioned by the management as well in its accounting policy. So this is it. It is done from my side. Over to you. And if anyone wants to ask any question, then he or she can do so.
Thank you so much, sir, for such a wonderful deliberation. I thanks both the speakers, Gauravji and Parasji. Ashok sir, you are having few questions. You may please raise the questions. Ashok sir, you are there.
Thank you, Gaurav and Paras, for such detailed, insightful session. I think I really enjoyed a lot. Okay, and it was really giving insights of complete hospitality sector. So I have few questions. So, as an auditor, how do one vouch and check transactions of overseas tour operators, and how TCS provisions under Section 2061G of ITA 19161 is to be complied with the disclosures made in this regard? If you can help us.
So Thank you for Paras. Do you want me to take this one?
Yes, you can.
Okay. So Ashokji, thank you for the question. See, regarding tour operator, the process is pretty similar with respect to the audit, as far as audit is concerned, right? Because you will have to look at the agreed prices with them, right? There has to be a contractual obligation which needs to be looked at. And what is the fair commitment with respect to that the tour operators which get into a direct contract with the hotel. So they in the document that overall how much is the overall commitment which they are giving for this particular case, and this is on per guest basis. Then they are billing. So from that perspective, the process has to be quite similar to how we check for a domestic tour operator. Also, you talked about one more aspect that was for TCS.
Yeah, can you repeat, Gaurav? I didn't get you.
I said that you asked for TCS also, maybe. Did you ask for TCS in that?
Yeah, TCS provision. Yeah.
Okay. You're talking about the tax deduction in this particular case.
Yes.
Yeah, so of course this goes as per the provisions of the TCS, and the liability generally comes in the hand of the hotel, right? In this particular case, but the detailed provisions need to be looked into for the TCS. I will have to check that. Maybe if you have the details of the person who has asked the question, I can share a detailed write-up on that, which you can share with them.
Yeah,
there is a process around it.
Okay. So one more question is there from participants. Distribution channel use technology, and there is possibility of trading in room nights, like in case of goods. Differential pricing results in dynamic discounts. Whether discount need to be regarded as commission, and how this need to be counted considering accounting standards. Yes.
Sorry, could you please repeat the question?
It is for Gaurav once again. Okay, distribution channel use technology, and there is possibility of trading in room nights.
Ashokji, your voice is not very audible to me. Can you be a little louder, maybe? Sorry.
Achha. Distribution channels use technology, and there is possibility of trading in room nights, like in case of goods. Differential pricing results in dynamic discounts. Whether discount need to be regarded as commission, and how this need to be accounted considering accounting standards.
The discount, honestly, I think the question is going in two different directions. One is about the discounting and the commission part. So commission has to be accounted as a commission, right? Discount has got no role to play with the commissioning. So discount has to be given as a discount, and there has to be a proper approval authority for that. So that needs to be looked into from the discounting perspective. But when I think you've also mentioned that if someone tries to change the rate, right? So from that perspective, when you say dynamic pricing, so see, dynamic pricing is controlled pretty much by the hotel, and it's actually an inherent issue. It's an inherent issue which all the hotels face with respect to dynamic pricing. Maybe today you are sitting and checking the price for one hotel, right? And you have then you went back and you checked for the another hotel. The price keeps differentiating. It depends upon the number of days also, or what time during the daytime you are checking it, like airline prices. So the dynamic pricing is quite a phenomenon which is possible here. But I think it is whatever is the rack rate or the standard rate which you have said. If you are giving any further discount, that has to be taken as a discount only. There, it should not be treated as a commission, any sort of a commission which we are.
Okay, thanks. I think one more last question from my side. How to check guest damage during hotel audits?
Okay, so that's again that's another interesting area, because a lot of times what we see is that there is a damage which has happened with the luggage of the guest, or maybe the guest complains for some kind of internal damage, right? that maybe it can be anything on their stuff also. They say that I left this important or probably a very expensive alcohol bottle in my room, but when I came back, it was broken. So in this kind of a scenario, I think from the audit perspective, one need to look at the provisioning, right? That whether the hotel has a policy to record all the complaints. So as an auditor, one need to look at the complaint register and see that what resolution has happened to these kind of complaints, right? So there is a proper resolution which a hotel needs to provide for any kind of a guest complaint, right? This needs to be recorded. There is an escalation which is defined till different level, right? And then accordingly, auditor needs to make an assessment whether there is a need of provisioning in this particular case or not, depending upon the materiality.
Okay, thanks, Gaurav. One more question came. So, what are your thoughts on service charges and TDS compliance connected therewith?
Okay. See, service charges, I think it's a very interesting issue when you talk about the hotel sector, right? Because service charges have always been a debatable concept, right? Whether we should pay or not. But I think recently, with a lot of regulations coming in, it has been made clear that service charges will be applicable, right? So if the service has been provided, so service charges will be applicable. Earlier, people used to say that it's your choice. If you don't want to pay a service charge, then you can remove. So accordingly, that is always there when it is charged in the bills, right? If a service charges, and it is important also before we go on the TDS aspect to it that how a hotel is utilizing the service charge. That needs to be looked from the audit perspective, right? Some hotels use this service charge to be distributed to the staff, right? Some use it for their staff welfare, and because that's ultimately the perspective of collecting a service charge. So that needs to be looked into. And yes, TDS provision is definitely applicable in that.
Okay, thanks. That's all from my side. Kulbhushan, you have few questions?
Yeah. First of all, thank you very much, Paras and Gauravji, for such a wonderful deliberation. We are highly elated by your points and your lectures. I would like to ask some question from Paras first. Parasji, what is the accounting treatment for guest loyalty points? Can you
so much,
throw
sir,
some light on it?
for asking this question. This is an excellent question. So generally what happens, hotels provide different kinds of loyalty points to the guests, right? And if the rights is the material right, then as per the provisions of Ind AS 115, this is required to be accounted for as a deferred revenue until this point is redeemed by the customer. So suppose hotel has charged 10,000 rupees as room revenue from the guest, and he is also providing the few points to the guest, which is equivalent to, let's assume, 500 rupees, right? And for the hotel industry, let's assume this is a material right. In this scenario, what should be the case? What general entry should be passed in the books of account? Hotel should debit the bank account by 10,000 rupees, right? And it should credit the revenue by 9,500 rupees only, and not by the 10,000 rupees. And the remaining 500 rupees should be charged as a deferred revenue as per the provisions of Ind AS 115. And suppose these points having the validity of 30 days, if within the 30 days these points are not redeemed, then these points will get expired, correct? In this scenario, if the guest utilized these points before 30 days, then revenue should be recognized at that point in time. But on the other hand, if the guest has not utilized these points and these points have got expired, in this scenario, these revenue of rupees 500 should be recognized in the books of account when the 30 days period has lapsed. So this is the accounting.
Thank you very much. Thank you very much for this deferred revenue concept. Secondly, I would ask basically about cost of paintings, whether they should be capitalized or they should be taken as revenue expenses. And
Okay.
what should be the life of painting?
Okay, again, this is very interesting question. So if the life of suppose if the life of painting is more than 1 year and it is having significant amount, right, then it should be capitalized in the fixed asset register of the hotel. Why? Because as per the provisions of NDS 16 and also as per the provisions of AS 10, which talks about the property plant equipment, they say that if any tangible asset is being used by the company either for the purpose of production or manufacturing of goods or for providing services or for administrative purposes as well, then this tangible asset should be capitalized in the books of account. And these paintings are being held by the hotel industry for aesthetic purposes, right, for administrative purposes, and hence these paintings should be capitalized if they are having the significant value.
Okay. That was the theoretical part. I would like to know the practical part. Is usually they capitalize all the paintings?
Yes,
You
because their paintings are expensive paintings and hence usually and practically they capitalize it.
okay? Thank you.
I
My
think
another
Kulbhushan ji,
question.
sorry, I am
Yes, sir.
adding in between, but a very interesting topic here will be that how to assess the cost of the painting. Because generally, I
Yes.
think if you say and you can get a bill stating that this painting is for 1 crore rupees or
Yes, sir.
the cost, so it is very difficult to decide on the cost of the
Gaurav,
painting.
Gaurav, do you have any interest in paintings? Can you give me 4 or 5 good painters' name?
No, I'm not from that
Okay,
side.
okay. When you will from that area, na, if you will say this is Raja's painting, this is Swami Nathan's paintings, this is Hussein's painting, so you know this painting was sold or the auction of that painting was that much, so this should be nearby of that amount. So
Right.
painting is basically a hanging check. Painting is nothing more than a hanging check. It's a treasure. Basically, when a painter is no more or the artist is no more, the value of painting will increase day by day. So is it treasury? My another question. Thank you
So
for
one
your
more
valuable
point I
input,
want to
Gaurav.
add here, Institute has issued education material with respect to the India's 16, in which this point has been covered as a FAQ, right? In which they have clearly stated that the cost of painting should be capitalized if the cost is significant.
Okay, okay. My another question is from you, Paras. Um, uh, can you throw some light on the accounting treatment of barter transaction? Nowadays, we are seeing a lot of YouTubers, a lot of basically advertisements. Companies were doing, they are doing the barter transaction with hotels or some restaurants or inviting some celebrities. All this. So say there are
Correct.
many barter transactions are happening. So what is the accounting treatment of these barter transactions?
So accounting treatment is very simple. Once you are receiving the services from the another entity or you are receiving any kind of goods, right, in this case in the books of the hotel, accounting entry should be passed on the basis of the fair value of the services or the goods received, right? But if the hotel cannot identify the fair value of the goods or services received, in this scenario, the transaction should be recorded on the basis of the fair value of the services provided by the hotel, right? And if both the fair value cannot be identified, means the fair value cannot be identified for the goods and services received and the fair value cannot be identified for the services provided, in this scenario transaction should be recorded on the basis of the book value.
Okay, you both have explained very well, but I think one area was missing. You have not mentioned forex. Whenever I have entered in any hotel, I have seen a forex desk over here. Always in every 5 star, 7 star hotel, a forex desk is also there. So how they basically can you enlighten us regarding the forex transaction of an hotel? Of the accounting treatment of forex.
So I have already explained while I was telling about the recognition of revenue. So if foreigners have been staying in the hotel and they have made the payment in the foreign currency, in this scenario, auditor needs to ensure that proper billing rate, that is the rate of the transaction date, has been charged for raising the invoice and for the settlement of the invoice. So basically, the rate of the transaction date should be used to convert the amount into the INR currency.
Okay. And what about India's applicability and all these things?
So India's 21 is applicable for all the forex transactions.
Okay.
Right. So if you have received any transaction, if you have occurred any transaction, then the rate on the date of transaction should be considered for the billing purpose.
Okay. My next question is from Gaurav Bhatia ji. Gaurav ji, can you throw some light on the GST portion, although that is not related to AASP board, but many viewers are asking because that was also a very gray area that is related to hotel industry because we are staying in different hotel in different states. Can we take input of that GST?
Sir, that is again a very debatable topic which you have picked up, right? I'm not a subject matter expert on the GST side, but see, from it depends with respect to the usability of that, because a lot of litigation was there that whether this trip should be regarded for the business purpose or not. That needs to be looked at from the GST side. So, with the limited knowledge I have, I think because I have not worked on the GST in this particular case, but the GST credit, if it is for the business purpose, then that can be taken. Otherwise, this should not be allowed.
Okay, that's it. And secondly, you have mentioned one thing, Gaurav, in your deliberation that the religious tours in India, one time of tourism. So I would like to know how much what is the size of this hotel industry in India, and what is the contribution of religious tourism in that?
See, exact numbers I might not be aware right now, Kulbhushanji. But if you ask me, when I was researching on this particular aspect, and that's why I brought it up, that India is one of the very rarest destinations which has a spiritual tourism, right, or spiritual hospitality, as they say, right. And unlike any other, I mean, on the globe, you can count on fingers where there will be this. I think Makkah will be another one where there will be a possibility, right, on the Saudi side. But otherwise, a lot of places you will not find that. But in India, if you see from the lower middle class perspective, the study which I was going through, it stated that almost around 18 to 25% was the total quantum of your religious tourism, when they say that people travel for religious purposes, which is almost equivalent to 1/4 of your total number of the.
Okay. One another question is somebody's eyes. It recently is cultural and religious and spiritual reawakeness among Indians is the reason of increasing this spiritual tourism in India, or there is any other thing or any other factor which are behind to increase this spiritual
So,
and religious tourism in India.
I think very good question, but let me tell you, I think this was always there. I mean, we were always a country who's having a country which is so diverse and having multiple religions, right? People from multiple religions, and therefore we also have multiple religious destinations, right? Across, right? Be it right from north, east, west, south. In every state, you can have multiple locations, and that is the reason why the hospitality sector or hotel sector have started looking for this as an option, right? That they make the tour packages, right? Even the tour operators, even the aggregators like the Make My Tip and Yatra and all, they sell these packages stating that the hotel stay will be included, right? A consolidated or
Like
composite scheme. So from that
Char Dham
perspective,
Yatras.
yes. Even Ayodhya now is becoming very popular, right? So you would all know. So from that perspective, I think it's right. But yes, government is definitely putting a focus there, right? And they are also pushing it. The state governments, like UP, is doing it for their state. Accordingly, Maharashtra is doing it for the religious places in their state. Of course, we all know about the ones which are there in the Jammu Kashmir also, right? JNK has their own tourism because of that. So accordingly, each state is making the most of it, and I think it's a good business for the hospitality sector.
It's a booming and
A
it's
lot
good.
of 5-star properties are now coming across various, because the 5 stars were not very trusted, Taj and all. But now you see these hotels, brands like Taj, brands like Chalets and all, Marriott's and all, they are bringing up closer to these spiritual destinations also.
Yes, it's good for economy, it's good for employment, and it's good for everyone. So it's all from my side. I over to Anilji to say.
Acha, I have one more question, Paras Gaurav. Can you guide us for cancellation charges? Can we book the same in the same month, or we have to wait for some time, and whether we should have some policy in that regard?
So you can frame the policy with respect to the same, and you can charge it immediately once you get the cancellation payment. Means once it is confirmed that guest will not visit the hotel and he has paid the cancellation charges, you can book immediately. There is no need to wait for few days or few months.
But here there is an interesting aspect, Ashokji, that there is a charge wherein for the cancellation fee, some part hotel might retain and remaining they will refund. So the part they retain does not go to your revenue from hotel operation.
Correct.
It is not considered as your hotel operation. That should be booked as the other income item.
Okay. And anything on biohazardous, because nowadays hotel, or you can say, are having some policies in that regard. We have to mention that also. Requirement is there on biohazardous things.
Yes,
in case.
sir. Yes, definitely. There is a requirement with respect to the disposal of the hazardous waste. So there's a hazardous waste act also, the statute which I mentioned. So, but see, from the auditing standard perspective, that is, I don't think that's required. But while we do internal audits and the reviews, internal control reviews, that time we definitely look at the compliance requirement. But does not, I don't think it impacts any of the auditing standards as such. Maybe Paras, if you want, if you have
Yes,
anything.
correct, Gaurav. So in the financial statement, nothing is required to be mentioned for the same.
Okay. Thanks. That's all from my side. Over to you, Anilji.
Thank you so much. Thank you so much towards Gauravji and Parasji. You have covered all the aspects relating to the hotel industry and covered all the auditing aspects relating to the hospitality sector. So, on behalf of Auditing and Assurance Standard Board, I extend my heartiest thanks towards you, Gauravji, and Paras Chaddaji for the wonderful and detailed deliberation. Thank you so much. I also thanks both the learned moderators, respected CA Ashok Jagyasi ji and CA Kulbhushan ji, for wonderfully moderated, as well as the wonderful question answer session at the end also. So, thank you so much, Ashok sir and Kulbhushan ji, for wonderfully moderated. And I also thanks all the participants of today's webinar. Thank you. Thank you so much.
Thanks,
Thank you,
everyone.
Raj.
Thank you. Thank you.
Bye.
Thank you.
Bye.
Thank you. Thank you. Bye-bye.